There's a concept I keep coming back to, one that I think about more than almost anything else when it comes to personal finance, and it has nothing to do with stock picks or savings rates or which brokerage account you should open. It's the question of enough. Not enough as in barely scraping by, but enough as in genuinely, deeply satisfied with what you have built and what you have. And here's the thing, most of us never actually get there. Not because we don't earn enough, not because we don't save enough, but because we have never actually defined what enough looks like for us. We just keep moving the target. I've been sitting with this idea for a while now, and the more I look at the data, the more I talk to people about money, and the more I reflect on my own relationship with financial goals, the clearer it becomes that this isn't really a math problem, it's a psychology problem. And the numbers back that up in a pretty uncomfortable way. When researchers surveyed people across a wide range of income levels and asked them how much they would need to earn to feel genuinely happy or noticeably less stressed about money, the answers were almost painfully predictable. People earning around $30,000 a year said they needed roughly $50,000. People pulling in $60,000 said they'd feel better at $85,000. Those already earning $120,000 said happiness was somewhere around $150,000. And at the top of the chart, people already earning well over $200,000 a year said they'd need something closer to $350,000 or more to finally feel settled. Do you see what's happening there? At almost every single income level, the answer was almost always just a little bit more. And in absolute dollar terms, it wasn't even consistent. The gap actually got larger as the incomes grew, not smaller. The higher someone's income, the bigger the leap they felt they needed to make. Now, there was one interesting exception buried in that data. In the middle income ranges, somewhere around $100,000 to $150,000 a year, the gap between what people earned and what they said they needed compressed noticeably. And I think that's because people in that window often feel relatively comfortable compared to the general population. But they aren't yet circulating in social or professional environments where extreme wealth is the norm. Once you step into genuinely high-income territory, your reference point shifts. Suddenly, your circle includes people earning multiples of what you earn, and that recalibrates what feels like enough almost instantly. It's not about greed or carelessness. It's just how our brains work. We calibrate our sense of abundance against the people and lifestyles we see up close. And if those people keep leveling up, so does your internal benchmark, whether you intend it to or not. There's actually a name for this in behavioral psychology. It's called the hedonic treadmill. You hit a financial milestone, you feel a surge of satisfaction, and then, fairly quickly, you return to your previous emotional baseline and start eyeing the next level up. The achievement doesn't stick the way you thought it would. The feeling fades. And so you tell yourself that the next number, the bigger one, that'll be the one that actually does it. But it doesn't. And then you tell yourself the next one after that will. It's a loop that doesn't have a natural stopping point built into it. You have to build that stopping point yourself. And this is what I think is one of the most underrated and underused ideas in personal finance. Deciding in advance what enough actually looks like for you before you get there. Not after you hit a milestone and realize it didn't feel as big as you thought. Before. Because here's the reality. Once you're on the inside of a number you used to dream about, your perspective shifts. What once felt like an almost unimaginable achievement starts to feel ordinary pretty quickly, and your eyes drift to the next marker on the horizon. But if you've already written down, clearly and specifically, what enough means for you, what lifestyle it funds, what freedom it creates, what it actually looks like on a Tuesday afternoon, you have something to anchor to when that drift starts. I've heard of people, genuinely high net worth individuals, who got so intentional about this idea that once they hit their defined enough number, they committed to giving away everything beyond it, to causes they believed in, to family, to community. because they knew exactly what they needed, and they didn't want the excess to become a new source of distraction or anxiety. I'm not saying that's the right approach for everyone, and this isn't GeraldTalks telling you to live small or to live large. What GeraldTalks is saying is this: take the time to actually design what your ideal life costs. Not your fantasy life, not someone else's version of success, but yours. What would your day-to-day look like if you felt genuinely free? What does that cost annually? And then, working backwards from there, what would a portfolio need to look like to support that sustainably? That number, your number, is your finish line. And the power of knowing it isn't just financial. It's that it protects your time. Because every time you move the goalpost without asking why, you're not just adding a dollar figure to a spreadsheet. You're potentially adding years to how long you stay in a season of life that was only ever supposed to be a means to an end. More years of stress, more years of deferring the things you actually want to do, more years of just a little longer, becoming the whole story. And here's what the data also shows us that we don't like to talk about. A significant portion of people who have crossed the $1 million net worth threshold still consider themselves middle class. Not because they're delusional, but because their lifestyle hasn't changed much, their identity hasn't changed much, and their reference points haven't changed much. The number in the account doesn't automatically rewrite how you feel about yourself or your place in the world. Wealth isn't just a balance, it's a relationship with what you have and how you live. And if you've built that balance through decades of discipline and intentional restraint, waking up to 7 figures doesn't suddenly flip a switch inside you. Which means the feeling of enough can't come from the account. It has to come from a decision, a deliberate, conscious choice that you make in advance and return to when the pull to move the goalpost starts creeping in. Because it will. There will always be someone in your orbit doing more, earning more, accumulating more. That's not going away. What can change is whether you're measuring yourself against them or against the life you actually designed for yourself. So I want to leave you with a genuinely useful question, not just a thought exercise. What is your number? Not the number that sounds impressive, not the number that would make someone else nod approvingly, but the number that would allow you, specifically, to look at your life and say with real conviction, this is enough. I want to know. Drop it in the comments below, or just tell me how you think about this, because I genuinely believe this is one of the most important conversations we can be having around money right now. New content goes up every single week here on GeraldTalks, so if this resonated with you at all, give it a like, share it with someone who needs to hear it, and subscribe if you haven't already. I'll see you in the next one.